Okay, so this explains the effect of transactions on the accounting equation. So I'm going to go through each of these examples and explain how it's recorded. Joe Malangu opened a shop on 1st January 2018, which he called Joe Spaza. The following transactions in respect of Joe Spaza took place during January 2018. So on the 1st, Joe opened a bank account for Joe Spaza and deposited 50,000 Rand of his own money into the bank account. So when the owner puts anything into the business, we call it capital. So when he put money into the business, capital increased, and capital forms part of equity, right? So we'll see that here. You'll see paid in capital, 50,000 Rand, right? And that forms part of your equity. And then the bank account would have also decreased, and bank is an asset. So here we see bank increased by 50,000. And we can see that our accounting equation balances because A equals O, owner's equity, right? Here they didn't have the word owners, but it's owner's equity plus liabilities. Your liabilities would be 0. So 50,000 equals 50,000 plus 0. So it balances. Okay, then the second one, Joe Spaza purchased shelves for 10,000 Rand on credit from Shelvit. Okay, so he purchased shelves for 10,000 Rand. So shelves, that's an asset, right? It's something that he'll need in his business. It's part of his furniture and fixtures, okay? So you'll see your assets will increase by 10,000. And because he bought it on credit, it affects our liabilities because we now owe someone money, which means our liabilities will increase by 10,000 and equity is 0, no change in equity. So notice how you would think that money is, so if you owe somebody money, I wouldn't say money is leaving yet because we haven't paid it, but we owe someone money and we bought shelves. So you would think that it would affect the worth of your business, it would affect equity, but notice here that it doesn't affect equity. It's only when the money, when money, like an expense is increasing, then it would affect your equity. In this case, because it's an asset, your assets would increase and your liabilities would be affected. Nothing happens to your equity because it's not an income or an expense for that matter. Okay, and number 3, Joe Spaza purchased a second-hand van for 10,000 Rand cash. The van will be used to purchase stock for the tuck shop. So the van is used more for delivery purposes, right? So this is a long-term or non-current asset that he's purchasing. So your assets will increase by 10,000. Okay, and he purchased it for cash, which means assets are also going to be decreasing by 10,000. Okay, so this was number 3. It's plus and minus 10,000. You can see that here. So your bank account will decrease by 10,000. And then see number 3, it's got it twice because it was the debit and credit both in your assets. Okay, so your bank is decreasing and van or motor vehicles, you could say, would be increasing with 10,000. The last one, Joe Spaza paid Shelvit 5,000 Rand in partial payment of the debt of 10,000 Rand. So remember, they bought those shelves for 10,000 and now they're paying 5,000 towards that. So your bank account will decrease because you are paying money. So minus 5,000 in your assets and your liabilities will decrease by 5,000. So we had bought on credit for 10,000. We now paying them 5,000. So it would decrease by 5,000. So you see minus 5,000 in your liabilities. It means we now owe them, or the balance is 5,000 Rand. Okay, and we can see that our accounting equation balances because your assets is minus 5,000, equity is 0, and liabilities is minus 5,000.